Fine. So let us move on to the very important chapter, input tax credit. Okay. So very important, very interesting chapter actually in the entire GST. The very interesting chapter is input tax credit. Why? Because input tax credit is the heart of this tax. You know that already, you would have understood the relevance. And even in practice, you can happily focus on this well. And this is the area where we should make sure the client is not doing any wrong things, where wrongly availing ITC, all that stuff, because this is the area where there is good revenue leakage for the government, all that stuff. So now coming to input tax credit, you know already the basic. Who can avail ITC? Who can avail ITC? Seller or buyer? Seller or buyer? Supplier or recipient? Recipient. Recipient avail ITC. And what he will do with that? He will set off with the output tax. Can I say that way? So now simple, please understand. In the first chapter, if you remember, we have discussed this example, Vishnu, MSD, Virat. Correct, Abba? So please understand, input tax credit is nothing but the GST paid on your inward supplies. GST paid on your inward supplies. And when you pay the GST on your inward supplies, sir, you can avail ITC of that. Who can avail ITC of that? The recipient, as you said, like buyer, recipient, whatever. So recipient can avail the ITC. But to avail that ITC, we have understood simply what? I am buying, I am buying something, paid GST, so I can take ITC. Taking that ITC, what I will do? Set off the output tax, GST payable, and settle the balance liability in cash. Correct. But sir, to avail that ITC, what are the conditions? That is what we are going to see in this chapter. Okay, so here see, for example, Vishnu has purchased something from MSD. How much? 1 lakh plus GST 18,000. So 18,000 Vishnu is taking as ITC here. So now when Vishnu wants to record this amount 18,000 as his ITC, okay, what are the conditions Vishnu has to satisfy? Sir, Vishnu should be a registered person, we have understood, basic one. And Vishnu should be using that for business purpose, correct, whatever he is purchasing. These are the basic conditions what we have seen. But now we are going to dive into the concepts where there are so many conditions to comply with so that he can avail ITC. For that, what are the conditions, etc., we will see. Not only that, after that availing ITC, what Vishnu will do? Vishnu will make a sale, and when he makes sale, there will be output tax liability generated. While discharging that output tax liability, sir, Vishnu is setting off this ITC, utilizing this ITC. So for utilization of ITC, what are the conditions? How can you utilize? Okay, so what are the rules for utilization? All those things in detail we are going to see. So this chapter, input tax credit, is going to be all about what? Availing ITC, utilizing ITC, and in what circumstances ITC will not be given to you, like that. So we are going to see various things. Okay, so mainly in this chapter we are going to see section 16, 17, 18, 19 and 20. Okay, so these are the sections we are going to cover. And of course some other sections from different chapter, payment of tax, I have just taken it in the discussion here itself, so that the utilization of ITC concept also will be taken care of. So related to the ITC concept only, which is there in different chapters. So section 49, 49A, 49B, so all that stuff. So we are going to discuss in this chapter only, so that we will understand how to solve the problems regarding ITC, how to calculate GST payable. And one more interesting thing here is, sir, we are going to see rule 42 and rule 43, which are, we are going to see other rules also, but these are the very important rules, which are like advanced version, where you might have seen these conditions, all that stuff. Now what we are going to see in your CA intermediate also, but this rule 42, 43 you would have not studied in your earlier levels. This is first time you are going to see rule 42 and 43, where common ITC we are going to appropriate between the taxable supplies and exempt supplies. That scenario we are going to see. Okay, so let us start the discussion. In the meantime, you will understand everything. Shall we continue? Right, now see, whenever you are talking about input tax credit, there might be some confusion in our mind, like who can avail ITC, who can utilize ITC, how to be like utilized or set off, all that stuff. There might be some small confusions. Why? Because see, now you are like, who can avail ITC now? For a second at least, recipient or supplier, like that, the doubt may come in future. Now we are like in the subject discussion, obviously fine, But later on in future you may get a doubt like, sir, who can avail ITC, who can set off, how do we deal with ITC, all that. So to keep your basics, the fundamentals very strong, these two flowcharts will help you a lot. This one and this one. Okay. So whenever your fundamentals are little bit disturbed, so these two flowcharts again will give you that, okay, clarity on how to deal with ITC. So let me just explain that, then I'll give you time to copy that. Am I clear, pa? Now first listen, when you talk about GST liability, listen carefully, look at the screen, buffaloes. When you talk about GST liability, sir, GST liability will be generated on what? On outward supplies or on inward supplies also, if the inward supply is covered under RCM, correct? So on outward supply also as well as inward supply also, when inward supply is covered under RCM. But the point here is, sir, outward supply is covered under FCM or RCM, or inward supply is covered under FCM, RCM, anything is possible, correct? So sir, I am a person who is doing business. I am making outward supplies also, I am making inward supplies also. Now coming to the point, sir, if at all I am making outward supplies, outward supply may be under FCM or it may be under RCM. Okay. So now if it is under FCM, who should discharge the liability? Supplier only should discharge the liability. How will he discharge the liability? Sir, gross liability minus ITC, anything balance payable in cash. That is how he is going to pay to the government, correct? No sir, his outward supplies are covered under RCM. Then what will happen? I am making a supply to you, it is covered under RCM. You will directly go and pay GST to the customer, government, sorry. You are going to pay tax directly to the government. But what is the disadvantage I will have? I cannot avail ITC on my inward supplies. And as my customer, you are going and paying directly the tax amount to the government. Yes or no? So now, can you avail that as ITC? Yes or no? That is your inward supply. You can take ITC. Only disadvantage to me. This doubt clarify in the next thing, inward supplies. Am I clear? Now what will happen? Sir, customer, talking from supplier point of view, my outward supply covered under RCM. So what is the problem here now? I need not pay anything to the government. You will directly go and make the payment. What is the disadvantage for me? I cannot avail ITC on my inward supplies because my outward supply is coming under RCM. Am I clear? Am I clear? Now, sir, next one. Now let us talk about inward supplies. That means about you. I am the supplier, you are the recipient. Let me talk about you. Sir, for you, your inward supplies might be covered under forward charge, might be covered under reverse charge, correct? If it is covered under forward charge, what you will do? You will pay the tax to the supplier, supplier will pay to the government, government will give you ITC, correct? The circle. So net impact 0. Same way, imagine your inward supply is covered under RCM. What you will do? You will pay GST directly to the government. Government will again give you the same amount as ITC. That means you tell me here, when you are discharging your GST liability under RCM, first thing, can you take ITC or not? Can you take ITC or not? Yes, but you should pay the amount to the government, no, first. While paying the money to the government, can you use your ITC balance? You should pay in cash, first pay in cash and take ITC. Okay, you cannot say, sir, I will pay in ITC and let me take ITC in. No. So first thing, earlier what you are doing, you are paying to supplier full cash, then you are taking ITC, correct? Now you pay full cash to government and take ITC. Okay, so that means RCM liability, understand, always to be discharged in cash. Okay, so that is what the basic fundamental thing. Now that means what? See, ultimately, sir, I will talk with government directly in two situations, sir. I will deal with government directly in two situations. What are the two situations? Number one, outward supplies covered under forward charge. I will directly go and talk with the government. I will make payment. Second scenario, inward supplies covered under RCM. Then also I will directly pay to the government. Am I clear? So those are the fundamental aspects. Am I clear? Just let me continue the discussion. Listen carefully. Listen carefully. See now, what is the example number, ma? Now listen, look at this carefully. Yes. Now understand, CA Vishnu, outward supplies taxable or exempt? For a chartered accountant, we have not seen any exemptions. So services provided by chartered accountant are taxable. Taxable under forward charge or reverse charge? Forward charge. Now, sir, Vishnu is making an outward supply, taxable under forward charge. For making this taxable supply, I'll give time to copy or listen carefully. So, for making this outward supply, Vishnu might be making some inward supplies. Now, tell me whether Vishnu has any restriction on this ITC, availing ITC. No. Why? Because his outward supply is forward charge, taxable under forward charge. Okay. So, Vishnu can take happily ITC on his inward supplies. But sir, inward supplies are covered under FCM or RCM. Will that really matter to you? No. For you it is an inward supply, simple. Inward supply, forward charge. Now what you will do? Sir, Vishnu will directly go pay to the government and take ITC. Okay. Sorry. Vishnu's supplier. Okay. So let me just write down here that clearly. Vishnu's supplier, correct? Will pay the amount to government and Vishnu will take ITC, correct? Vishnu will avail ITC. Okay. Now, sir, here if his inward supplies, Vishnu's inward supplies are covered under RCM, who will pay GST to the government? Okay. Vishnu will pay government. And who will avail ITC? Vishnu can avail ITC. Yeah? Shall avail ITC. Vishnu shall avail ITC. Am I clear? This is fine. Imagine Vishnu is an advocate. Outward supplies are exempt. Sorry. See, advocate, two possibilities will be there. Most of the cases, max to max, either taxable or exempt. Advocate services provided to individual divorce case, any person other than business entity, exempt, or provided to business entity, taxable. Big business entity, not small business entity, big business entity, taxable. And legal services coming under RCM. So mostly like what? Advocate services will be either exempt or taxable. If it is taxable, it will be taxable under. Am I clear? Right. Now, sir, Vishnu is an advocate. Imagine his outward supply taxable under RCM. Now, Vishnu is making some inward supplies, receiving inward supplies. Can he take ITC? No, he cannot take ITC. No matter his inward supplies, his purchases covered under FCM or RCM, whether it will make any difference. No, see, understand, you are not going to generate any output tax. I will not give you any input tax. Simple. Remember that way. There is no output tax in your hand. I will not give you input tax. Simple. Am I clear? Whether your inward supplies are covered under forward charge or reverse charge, it doesn't matter. If you see the previous case, what is the story? Sir, this fellow is generating output tax liability in his own hands. Vishnu is a chartered accountant generating output tax liability which is payable from his hands. So whatever the inward supplies, he can take ITC. No matter the inward supply is covered under RCM or FCM. Am I clear? Shall we proceed? Right. Now, one more thing. Let us assume Vishnu is a doctor. BBS, FRCS, London, written. Okay. Now, his supplies are healthcare services, exempt, no cosmetic beauty treatment, normal healthcare services. Kavya is suffering from fever. I am just giving her one injection. Okay. So, the point is just normal healthcare services, exempt. Now, you tell me the logic remains the same. Whether he is generating any output tax in his hands. No. That means, can he get ITC? So now understand, sir, whether is inward supply, whether it is coming under RCM or FCM, it doesn't make any difference. The logic remains the same. Ray, you are not generating any output tax in your hand. So what is the need of me giving you ITC? Are you able to understand? So that is what the concept. Shall we proceed? Pakka? Everybody? Right. So that is what the story here. Now, see, understand, these three scenarios will give you proper clarity regarding ITC and not availing ITC. You should maintain this clarity always. Okay, because when you see a overall comprehensive problem, some purchases may be related to exempt supplies, some purchases may be related to taxable supplies, some purchases you may be using for RCM supplies. Like this, there might be mix, combination. So you should have a clarity which I can take ITC, which I cannot take ITC, all that stuff. Shall we proceed now? Right, shall we copy, take the notes of this? Okay. See, for you I am becoming a doctor also, advocate also, chartered accountant also, plumber also, carpenter also, traffic police also. What, Shiva? Don't think too much, Ra. Don't go to the meme. I am a doctor, carpenter, plumber, traffic, not traffic police. Okay. So, give the heading, start in a fresh page, chapter number 8, input tax credit. Is the font size visible, guys? Okay, first you wear your specs, madam, then it will be visible. Visible, Ra, Shiva? Okay, then I will zoom it, Ra. Okay, now, however, I am going to zoom it, just plan the space accordingly. Okay, those who are watching the recording, students, see, first pause the video and copy this. Those who are watching the recordings, pause the video and copy this. Next, pause the video and copy this. Pause the video and copy this. This is one flowchart. Next, pause the video and copy this. Pause the video and copy this. Next, example 77, where you are going to give chartered accountant, doctor, as well as advocate. So pause the video and copy this. See, look at Vallavanana's love and affection over you. First he will give coffee to you and finally only comes to me. That much care he is taking for you, and you are not even finishing the question bank and coming. Irresponsible fellows. Vallavanana, today also no homework na these fellows. Kolupu, that is called vitamin K. Or vitamin C, cholesterol. Pause the video and copy this. Pause the video and copy this. No, you enjoy your coffee till then, finish it off. Okay, hope you have copied this. Let us give example number here, 78. And here in both cases no ITC. Example 79. Pause the video and copy this. Question. So let us see the main discussion of this chapter. So coming to the point, so introduction, all that stuff we have already discussed. So coming to the first section in this chapter, section 16. So if you remember last section, what we have discussed was 15, value of supply. I mean okay, exemptions 11. So before this, section 15 was value of supply. Okay, right. So last section 11 exemptions. Okay, fine. So 7 supply, 8 composite supply and mixed supply, 9 charge, 9 subsection 3 RCM, 9 subsection 5 e-commerce operator liable to pay GST, section 10 composition scheme. How many subsections talks about composition scheme? 2 mainly, 1 and 2a, but 1 should be read along with subsection 2, the conditions. Subsection 1 conditions are given in subsection 2, but subsection 2a conditions are there within subsection 2a itself. Subsection 1 is for manufacturers, traders and restaurant service providers, and they are allowed to provide some marginal supply of services. Subsection 2a is for who are not eligible for subsection 1, who are not eligible for subsection 1. So anybody can take it who are not eligible for subsection 1, but subsection 1, the advantage is threshold limit 150 lakhs and 75 lakhs, but in subsection 2a only 50 lakhs. Okay, so that is what the point, right? So let us continue the discussion. Section 11 we have discussed exemptions. 12 time of supply for goods, toss for goods. 13 toss for services. 14 so time of supply in case of change in rate of tax. 15 value of supply, and in 15 we have seen valuation rules also. Rule number 27, 28, 29, 30, 31. When 15 subsection 1 is not applicable. This is as per subsection 4. Next 15 subsection 5, notified supplies. Valuation will be based on the rules again. So rule number 31A, 32 we have seen. Okay. In 32 mainly 32, sub rule 2, 3, 4, 5 we have seen. Okay. So that is what the discussion. Now let us move on to section 16. So what is section 16? Section 16 is sir eligibility and conditions for availing ITC. In section 16 there are 4 subsections. Very easy one. Subsection 2 alone little bit lengthy but very easy. Very important section also, right? I repeat, very important chapter. Be very attentive and please revise on the same day itself. Okay. Now, sir, section 16 subsection 1. Simple one, need not help you anything there. Finish 16 subsection 1. Already discussed the topic only. Check what it is actually. So what is this? Sir, simple, you should be first of all to avail ITC. What is the basic condition? You should be a registered person. And another condition is, sir, you should use it or you should have intention to use it. Because of that only, whatever the raw material lying in godown also you can take ITC. Not whatever has been used in the production. Sir, the stock underlying can also be taken as ITC. Are you able to understand why? Because what is that? Sir, you have an intention to use them. You might have not used them yet, but you have the intention to use them for business purpose. So you can happily take ITC. So the relevance of this point is, sir, you can avail ITC on avail ITC on 1. Goods or services used already, okay, or mostly services you cannot have stock with you, not mostly, definitely. So, or goods lying in godown, correct appa? Goods lying in godown, you can still take ITC. Why? Because you have intention to use them, in the course or furtherance of business. Okay, so remaining things obvious, small points. You know e-credit ledger, right? Those who have not at all dealt with GST might not be having the knowledge. We'll see that in some time. We will just talk about that e-credit ledger, all that stuff. As of now, please ignore this fellow. I will just talk about him in some time. Okay, fine. So now coming to the point. Section 16 subsection 1. Can I assume 16 subsection 1 is clear? Simple one. You should be a registered person. You should be using them for business, or you should have the intention to use them for business. Because we have spoken about using or intention to use for business, understand your purchases are classified into three categories. That is what, when you are seeing the books of accounts, you will be seeing inputs, next capital goods, next input services. Have you heard about these words, sir? In the books you have seen any audits, etc. In the books you have seen separate segregation like inputs, input services, capital goods. Mostly if you have done GST or 9C filing and all, you might have worked on this, categorizing inputs, input services, capital goods, all that stuff. But nothing to worry. Simple. What is that? Sir, inputs means what? Goods which are not capitalized. Normal raw material you are purchasing. So can I call it as input? Yes, it is not a capital expenditure, which are not. Copy along with me, ma. Same place you copy that. Capital goods, obviously goods which are capitalized, input services, obviously the services procured, so whatever the services we have procured. So now tell me, on what we can take ITC? Inputs are input services are capital goods are? All the three are eligible for ITC. What is the condition? You should be a registered person. You are using them for business purpose. So you can happily avail ITC on all the three. But they have not used that word actually in the law, capital services like that. But still, practically speaking, you can take. Okay, any services if you have capitalized really. If you come across that, it doesn't mean that you cannot take ITC. You can take, but in law they have segregated only these things: inputs, input services, and capital goods. That is why I wrote just services procured. I didn't talk about anything capitalization, etc. there. Input services, you have received the service, that's all. Sorry. So you have just received the service, that's all. Whether you have capitalized it or not, it doesn't matter here. Now, so write down there, give a floor back and write down. Avail ITC. Can you avail ITC, ma? Yes, you can avail ITC. But availing ITC obviously provided to certain conditions. Shall we proceed? Now, listen carefully. Sir, Section 16 subsection 1 is clear, very simple one. And here there is some clarification, circular. You read that. Have we already discussed it? We have already discussed regarding this original equipment manufacturer sending the molds and dies to component manufacturer. Should it be added to the value of supply or not? We have discussed, correct? Now, sir, we have seen whose obligation it is. If it is the component manufacturer's obligation and original equipment manufacturer is sending it, then it should be added. Supplier obligation, but recipient is fulfilling it. So then you add it. No, sir, it is not supplier obligation. Then you will not add. Here we are extending the discussion. Here this circular, here the discussion will be, sir, to supply the molds, and you are the component manufacturer. I am the original equipment manufacturer who has given the outsourcing work to you to manufacture some components. I am supplying molds and dies, correct? Those molds and dies we have already discussed should be added in the value of supply you are providing to me or not. That discussion is over. Now the concept is, I am giving you the molds and dies, but I purchased the molds and dies. I would have purchased. Can I avail ITC or not on that molds and dies? Why? Because I am giving it to you free of cost. Okay, I am giving it to you free of cost, and we will be seeing in 17 subsection 5 next blocked credits. Sir, anything given as free without consideration or something like that, we will see, you cannot avail ITC. Gifts, free samples or disposed of, written off, like that, all that stuff, you cannot avail ITC. That is given in 17 subsection 5. So people got a doubt. Now this fellow is giving to the component manufacturer molds and dies without consideration. So whether this fellow, when he purchased those molds and dies, can he take ITC or not, was the doubt. Okay. So you read and tell me the circular what it says. You read the analysis here and tell me what it says. You gone through that, you read that now. See, understand, first of all, one line point what I should focus here. You tell me. In like one line, this is what we have to focus here, sir. Just this one. One point. Exactly. Sir, molds and dies you are providing to component manufacturer. Simple, whether that molds and dies which are to be used for manufacturing the component, is it the obligation of component manufacturer to procure them and use, or it is not his obligation? We have seen the same concept in value of supply also. So the entire concept revolves around whose obligation it is. Okay. So here please understand, sir, it is the obligation of component manufacturer. He should purchase, but you are doing overaction and you are giving without consideration, free of cost. So I should reverse ITC there. Okay. Because his obligation, he will do that. Why are you giving him free of cost? He should buy and he should take care of it. No. But you are giving free of cost. So you reverse ITC. You would have availed ITC when you purchased molds and dies. You reverse ITC. No, sir. That is not his obligation as per the contract. So I am giving him free of cost. You call it free of cost. But I am giving this molds and dies. I am supplying these molds and dies to him to get my product manufactured. That means, am I doing this in the course or furtherance of business? So whatever I have availed ITC is correct. Are you able to understand? So the point is, write down here, refer notes. Refer notes. Now listen. See, first one. Sir, OEM, original equipment manufacturer. Okay. Sir, this fellow is purchasing molds and dies. He has purchased molds and dies and he has given to the component manufacturer. Component manufacturer does not have any obligation to purchase them and use them. So I am giving him from my end. That means I am doing that in the course or furtherance of business only. because that is not his obligation, right? So I am buying and I am giving to him. So whatever I am doing it absolutely in the course of furtherance of business. So the law says, you original equipment manufacturer, you have taken ITC, it is absolutely correct. Technically that means like you have given it free of cost, but it is not free of cost, it is in the course of furtherance of business. You are giving him molds and dies, asking him to manufacture you your component. Okay, so it is happily in the course of furtherance of business. You can happily continue taking ITC on that. Am I clear? Shall we proceed? Now here just I will link it to value of supply also. Now whether this should be added in the value of supply provided by component manufacturer to OEM. No, why? Because it is not the obligation of the, who is the supplier here? Now understand, listen carefully, look at this carefully. What component manufacturer is doing? Supplies the component. Supplies the component. Now for this there will be value charged by the component manufacturer, value of supply. So now here value of supply will include that molds and dies, will not include? Will not include. Why? Because when it will be added, who is the supplier here? Component manufacturer. Who is the recipient? OEM. Correct? So when the addition will be done to the value of supply, obligation of the supplier discharged by the recipient, but component manufacturer does not have any obligation at all. Are you able to understand? Just this clarification I am just connecting into that one also, value of supply concept, whatever we have discussed. Am I clear? Pakka, everybody? Right. So can I say value of supply provided by component manufacturer to the original equipment manufacturer, OEM, value of supply does not include the value of, why are you doing monoratara? Molds and dies. Am I clear? Sir, suppose, imagine. Sir, it is the obligation of the component manufacturer. Then who should buy that? Component manufacturer should buy that. Why are you doing overaction and giving to him free of cost that too? You purchased it and you took ITC. Now you are giving to that fellow. That he should only buy. Why you are buying and giving to him? You availed ITC. There is something wrong. You reverse ITC. I will not treat it like you are doing this in the course of furtherance of business, because if it is your obligation and you are doing, no problem. His obligation, why are you performing? So I will not give you ITC. So here two things will come into picture, sir. This fellow OEM cannot avail ITC on the molds and dies. He would have already availed, so he should reverse ITC. And also, sir, component manufacturer will component manufacturer is supplying the components. In that value of supply also this will be added. Molds and dies value. Are you able to understand? Clear? No confusions, nothing. Okay. Give some smile when you understand something. Don't be like so sad. You are not in your office. I am not your team leader. I am not your principal. I am not your auditor. Okay. So supplier supplies the component, value of supplies includes the value of molds and dies. Am I clear? Am I clear with that? Everybody, shall we take the notes of it? Everybody. Okay. Okay. Is the font size visible, ra? No, huh? Okay. So first copy this. Those who are watching the recordings, first pause the video and copy this. Pause the video and copy this. Pause the video and copy this. Then pause the video and copy this. I repeat, you will understand the value of your notes only when you are into revision. So please maintain the notes properly. And after the classes are over, don't give your notes, don't donate them, don't supply them free of cost to the bonda or bhaji shops. Okay. So pause the video and copy on those who are watching the recordings. Right, listen. So that is what the clarification. Now let us continue the discussion. So next 16 subsection 2, important one, conditions for availing ITC. So what are the conditions for availing ITC? Section 16 subsection 2, conditions for availing ITC. Okay, so if you see, sir, in this they have clearly given, and it is starting with non-obstante clause, notwithstanding anything contained in this section. Okay, no registered person. Why? Because why they are saying notwithstanding anything contained in this section? You said if you are a registered person, if you have used it for business or intention to use it for business, you can take ITC. Okay, so irrespective of all those things, no registered person shall be entitled to take credit of input tax unless first one is what, Ra? Unless, sir, he is in the possession of tax invoice or debit note issued by the supplier or such other tax paying documents as may be prescribed. So these are the things prescribed actually. So in simple words, sir, can I say here, to take ITC you should have some documentary evidence. Simple. So write down documentary evidence. Documentary evidence. Am I clear? So you should be having documentary evidence. Next. So what are the documentary evidence? What can be there with you? Sir, you would have the tax invoice given by the supplier. You would have the tax invoice given by the recipient. Recipient only raising invoice on himself. When it would be possible? RCM supply, where supplier is unregistered. Okay, so that is possible. Okay, write down there RCM supply. We will see that in another chapter also, nothing to worry. RCM supply, supplier is unregistered. Then what the recipient has to do? Recipient has to raise tax invoice on himself. Am I clear? Shall we proceed everybody? Next. What is next one? Sir, debit note issued by the supplier. Bill of entry. When you are importing the goods, you might have filed the bill of entry. Okay, so bill of entry or any revised invoice or document issued by the input service distributor. Who is input service distributor? We'll see in this chapter itself. So some documentary evidence you should have, simple, correct, to avail ITC. Am I clear with respect to that? So clause A is very simple. What is clause A is saying? Right, to take ITC, show me some documentary evidence. Simple. Shall we continue? Next, another condition. What is another condition? Clause AA. Read that clause AA. One second. Sir, the documentary evidence should contain what details, ma'am? Simple, just continuation. Sir, you said there should be some documentary evidence, sir. That documentary evidence should contain at least what? Contain at least, sir, amount of tax paid, description of the goods or services, total value of the goods or services, GSTIN of the supplier and recipient. Okay, both should be there. place of supply in case of interstate supply. These details bare minimum at least I want on the document. Okay, that is what simple one. Next, sir, any demand confirmed on account of fraud, willful misstatement or suppression of facts cannot be availed as ITC. Cannot be availed as ITC. This rule, sub rule 3 and 4 will come in sometime. Just give a pause to that. Shall I continue? Am I clear till now? What is clause A? Clause A, documentary evidence. That documentary evidence we have seen. And that document should have what details? We have seen. Clear? Shall I continue? Now what is clause AA? When you see clause AA, you should understand that is through amendment. Why? Because immediately clause A, they should have been clause B. So there is AA means it is through amendment. So some of the later on additions to the law. Okay. What is this clause AA? You tell me. What is this clause AA? The details of the invoice or debit note referred to in clause A has been furnished by the supplier in the statement of outward supplies, and such details has been communicated to the recipient of such invoice or debit note in the manner specified under 37, section 37. Okay. So clause AA is that, and clause clause AA is that. Sir, what is that they are trying to tell? So please understand 37, 38, 39 section numbers. You should remember 37, 38, 39. 37 is GSTR 1, 38 is 2, 39 is 3. 1, 2, 3. Remember that way. 1, 2, 3. 37, 38, 39. 37, 38, 39. 1, 2, 3. GSTR 1 is there, fine. 2 is not there, there is 2B. 3 is not there, there is 3B. So you remember 1, 2B, 3B, simple. Okay. Now, sir, how this GST actually the mechanism works? Please understand. If you remember, I already told you something like how GST will be implemented, all that stuff with the help of information technology. Did I teach you that in introduction class? Everybody should file their GSTR1, that will be reflected in the recipient 2B. Did I tell that? Yes or no? Again, just a quick recap how this ITC mechanism works, etc., etc. See, normally any person doing business, sir, everybody registered under GST, they have an obligation to file their GSTR1. While filing their GSTR1, what they will do? They have to give the details of their outward supplies. Sir, everybody in the market are giving their outward supplies details. That means everybody in the market, their purchases are captured. If it is a B2B transaction. B2C, no need to capture. Why? Because ITC will take only for B2B transactions. Correct, Amma? Right? So now, please understand. Sir, I am giving all the details of my outward supplies. Imagine we are filing, we are with the month of December over. December month is over. What we should do? Sir, December month is a tax period. Every person registered under GST file their GSTR1. So once they file their GSTR1, what will happen? Everybody in the market. Okay. Now, sir, I filed my GSTR1, giving all my outward supplies details. My outward supplies may be B2B, B2C. B2B, what I will do? Invoice wise details I will file. That means invoice wise, invoice date 1st December to Mr. Jay. Who is Jaira? How system will know, how department will know. Okay. So the point is, I should give his GST number in the GSTR1. GSTR1, the online form itself will show me his name. You just fill the number correctly, it will show the name. Am I clear? So you give the GSTIN, you give the value of supply, tax amount, all that stuff clearly. So like that, the supply made to Jay, supply made to Arvind, supply made to Ashik, supply made to Siva, so Pravina, like this, all these things, whatever the supplies I have made, all these things I have given in my GSTR1. Same way, sir, my suppliers also from whom I have purchased from Sandhya, Geeta, Kavya, Snega, like this. So I have purchased from few people. They also would have filed their GSTR1 now. So everybody filed their GSTR1. B2B supplies invoice wise you have to give. Why invoice wise you should give? Then only ITC matching can be done by the system. I already taught you in the first class. Everybody cannot take as their will and wish how much ever ITC they want. How much ITC they can take? Only whatever is reflected in 2B. Okay, so let us continue the example. So like that everybody in the market are filing their GSTR1. So what happens now? What happens now? So when everybody are filing their GSTR1, that means all B2B supplies are captured by the system. Now what the system will do? Let us assume I have filed my GSTR1. Let us come from my point of view only. I have given all my sales details to few people. So GSTR1 deadline is 11th of the next month. So filed it. IFF will come 13th. I will teach you that in returns chapter. So now the concept is, sir, we have filed a GSTR1. Now everybody filed their GSTR1. So everybody's purchases data is with government. If you give your sales details, that is my purchase. If I give my sales details, that is some other person purchase. So when I log into my portal, there will be one form called 2B, which is auto populated data of your purchases. Because everybody in the market gave their sales details, now system will give your purchases. You give sales details, system will give the purchase details. Correct, Amma? Understood the way how it works? Because while filing my GSTR1, I gave Jay's GSTIN. Sandhya, while she filing GSTR1, she said, I sold to Mr. Vishnu GSTIN like this. So what system will do? Sandhya, Kavya, Snega, Geeta, all these people filed their GSTR1 giving Vishnu's GST number. So system will just now collect the data GST number wise and throw to everybody like, Ray, these are your purchases, see. Okay, are you able to understand? So the point is, sir, system will show our purchases. So one system is showing my purchases, I have told to the system my sales. System is telling my purchases. That means I have told my output tax, system will tell my input tax. And understand, there is a good mechanism here where I have made 100 purchases, but only 95 are reflecting in the system. What I will do now? I will reconcile what is missing. As per my books, my tally, GST ITC should be 1 lakh this month. Only 95,000 reflecting in CGST, SGST. That means something is wrong. So accounts department immediately they will reconcile. Purchases as per books, purchases as per 2B. Something is missing. 5 invoices. These are the 5 invoices missing. What will I do now? Immediately I will call those fellows. The stupid fellows, you raised a GST invoice on me and I gave you GST, and without you filing GSTR1, how can I take ITC? Either that fellow has not at all filed GSTR1 or he filed but didn't give your invoice details. Possible? He forgot, or he might be angry on you. Don't want to disclose your invoice in the GSTR1. Okay, so that way somehow or the other those suppliers missed out their invoices. Am I clear? Now we will immediately call them and say, Ray, you file those invoices. Now understand what department has to do, you are doing. It is a department's duty. Anybody not giving their sales details to check that and give them the notice, all that stuff. But who is doing that now? Recipient. Department will say, you both fight on road, whatever you want to do, you do. I will give you ITC only if it comes in 2B. Why? Because you may say something false statement because you want ITC, but supplier will not tell it, because if he says it is his output liability increases. Okay, of course there are fake invoices, that's a different story. I am just talking about in the general sense where there is no intention to do fraud. Okay, so generally supplier will give the sales details, that means he is agreeing to pay some tax. So he will not lie mostly, but buyer will lie. Sir, I am eligible for this much ITC, sir. So what we are doing, we are coming up with simple statement, if it comes in your 2B, then only I will give you ITC. If it doesn't come in your 2B, I will not give ITC. Am I clear? So now what happened? I filed my GSTR1 for December month. Okay. Now immediately later on, 14th 2B will be generated. 14th I have opened my portal. I have seen 2B. In 2B, it has shown some purchases and I am able to see 10,000 is ITC for me. Sir, as per my books 11,000, sir. I will give you only 10,000. Why that 1,000 is not coming? You check. You go catch your supplier, fight with him. I don't care. For me, it is department says it is only 10,000. If you take more than 10,000, automatically system will know that you are taking more ITC. Based upon the risk parameters, etc., etc. If the variation is too heavy, they will serve you the notice. Varai Office ku vaarayen solli. So the point is system will generate them. Not even officer ra. The system says you are not even worthy enough that officer gives you the notice. I will give you the notice, like that system will generate the notice. Okay. So that way the point is it is very much what? Automated. Even you take 1 rupee extra, system will know that. Am I clear, ma? So now we have seen 10,000 is our ITC. Now after that 20th is the deadline for you to pay your tax. You have given your sales details, but you have not paid your tax. You gave your sales details, system is giving you your purchase details, that means your ITC. Finally before 20th you pay your taxes. Finally before 20th you please pay your taxes. Am I clear? So what I will do, I will file one document called 3B. GSTR 3B. This is a summary. Sir, my total sales for December month 10 lakhs. GST payable, CGST this much, SGST this much, IGST this much. You need not fill that also. System only will be auto-filling. How it will auto-fill? You file GSTR 1. So now see, nowadays GST filing not so difficult like how it was there in the initial days. You file properly GSTR 1. Remaining things will be taken care. Why? Because you have to file one more document only, correct? What is that? 3B. Why? Because 2B is auto-generated. 3B auto-filled. In 3B, we will show your summary sales, purchases ITC, set of both. What is the liability, correct? Sir, outward supply summary, system will pick from GSTR 1. ITC details, system will pick from 2B. System only will say, this much is the balance payable by you. You can make changes also there. You can make changes, but system will show you. If you make changes, maybe there might be some genuine reasons, all the stuff. I'll teach you in some time. There may be differences also, what the system is showing. Am I clear? For example, you went to purchase a television to Chroma store for your house. While buying the TV, the salesman asks, like normally they are asking, sir, do you have GST number, sir? They are not asking, sir, are you buying this for business? That should be the actual question. But they will ask, sir, do you have GST number? And you say, yes, sir, give your GST number, sir, you will take input. I am buying this for my house, ra. Imagine my brother went for shopping, ra. Okay. He gave GST number. That fellow knows only his brother has GST number, simple. He doesn't know GST and all. He is not professional like me, ra. Unprofessional fellow. He gave GST number. Purchased it and came. When I opened my GSTR 2B, TV is reflecting. Can I take ITC of that? Because law says you should be using it for business. And you know I am a honest fellow. I will not take ITC of that. Okay, because it is not used for, not a joke, Makavya, you are laughing, giving that sarcastic smile. Huh? Okay, just because you are not honest, you should not feel your sir is also not honest. No. Now listen. So the point is, sir, it is reflected in 2B. But can you take ITC? No. So that means system has shown, Vishnu sir, you are eligible for 30,000 ITC. In that 20,000 belongs to TV. So what I will do now? I will remove that 20,000 and I will edit it and make it 10,000. Or there will be reversal column. In that reversal column I will fill 20,000 reversal. Are you able to understand? In reversal column I will fill 20,000. That means whatever system shows, it doesn't mean that you are eligible for everything. But if you want to be eligible for something, it should be shown in the system. Am I clear? If you want ITC, it should come in 2B. But whatever is coming in 2B, it doesn't mean that you are eligible for that. Are you clear? Sometimes what is not yours may also be visible. Just because it is visible, it doesn't mean it is yours. Okay? You should identify whether it is yours or not. Am I clear? I am talking about ITC in 2B. Okay? So now, imagine, sir, 2B has shown 10,000 ITC. Yeah. One I am filing, I filed already. So there I have seen 12,000 is my liability. See, understand, in GST there will be 3 ledgers in your portal. Electronic will be 3 ledgers. First one is e-liability register. E-liability register is all about, you file your 1, your liability will keep increasing. You file your 3, your liability will come decreasing, right? It will be reduced. E-liability register only will get affected. Liability increases, decreases, increases, decreases based upon your filings. Am I clear? Now there will be one more thing, e-credit ledger. This is nothing but your ITC account maintained in the system. Whatever comes in 2B, if you file 3B, then only it will go and sit in your e-credit ledger. Then only you can use that. You have to pay your liability, correct? Where is liability reflected, ma? E-liability register. To pay that, you need ITC balance, na? That ITC balance should be picked from credit ledger. It will not be picked from 2B, Ray. Because it is there in 2B, it is not ITC for you. You file 3B, then only it will come in your e-credit ledger. Please be very careful with that. That means if you don't file 3B, sir, in 2B it reflected, no sir. Only if you file 3B only it will enter into your credit ledger. Are you able to understand? So that means simple. It is like 2B is like a delicious biryani somebody prepared for you. You should not keep on watching it. Yes, sir. You should eat it. So for that you should file 3B. Are you able to understand? 2B will just show this is your ITC. Only if you file 3B, then only you can take it to your credit ledger. But sir, while filing 3B, you will also make the payment. So the amount of ITC whatever you have taken in 3B will go to credit ledger and will come out of credit ledger while making the payment. In your 3B, liability itself is not there. Are you able to understand? In your 3B, liability itself not there. That month only purchases or no sales. Then what will happen? In 2B, ITC is there. You file 3B. That will go to credit ledger. Any payment is required. No sales, no payment. That will be carried forward to the next month. Clear? That means from 2B, credit ledger will be showing your ITC balance only if you file 3B. Otherwise, it will not show. Clear? Okay, sir, fine. There is one more ledger called e-cash ledger. You have the liability to discharge. Where is the liability? Liability is in e-liability register. You have to pay that. You have to settle that. Which balance you will use? E-credit ledger balance. You need ITC, correct? So we use which balance? E-credit ledger balance. Sir, that is not sufficient, sir. Just like when you are making purchases through Paytm, sir, money will first go to Paytm wallet and then gets deducted if you have seen. Have you observed that? This e-cash ledger is like a wallet. In GST portal in your website, there will be something called e-cash ledger, which will be like you upload cash into that. When you are making the payment will be debited from that e-cash ledger only. Am I clear? For example, I am using internet banking. From my bank account, first money goes to cash ledger, then goes to government. It is just like a wallet there. Okay. So 3 ledgers. What are the 3 ledgers? E-liability register. This is liability. How do you discharge that? Either using e-credit ledger balance or e-cash ledger balance. Am I clear, ma? Understood? Sandhya, clear? Shall we proceed? Right. So that is what. So finally what? Sir, in liability register, it is showing 12,000. Credit ledger is 10,000 balance. Now what should I do? I should top up that e-cash ledger 2,000 rupees using your internet banking, debit card, all that stuff. So whatever it is, we will see the modes of payment also in the different chapter. So that way you finish the liability, close 3B. This is how the story works. Okay. Now what is that clause AA they are saying? In clause AA they are saying, Ray, your supplier has filed his GSTR 1 na, then only you can take ITC, because then only it will come in your 2B. So I'll just continue clause AA and clause BA. There is one more clause they have added just to add support to this. So look at this clause BA. When you can take ITC? You cannot take ITC unless is that starting line, correct? Unless, sir, the details of input tax credit of the said supply communicated to the registered person under section 38 has not been restricted. So it should be reflected in 2B, and that should not be restricted by the government. Government can restrict that. So section 38, as I already told you, communication of details of inward supply and input tax credit. How that will be communicated to the recipient? Through GSTR 2B. Am I clear? If you file your GSTR 1 or you file your IFF, invoice furnishing facility, what is this? I will discuss in returns chapter. Okay. Now this will be overdose discussing so many things which are from different chapters. Okay, so just remember GSTR1 IFF is also a mini version of GSTR1. Simple. Am I clear? It is just a mini version of GSTR1. Just remember that way. Shall I continue? So this is what we have discussed now. Just go through this. Just go through this. 1 second. 1 second. Okay, this is now not required. Just leave it. Leave it. Coming back to the story. Coming back to the story. You are clear with this now till? Yeah. Okay. Now can I write here? Sir, supplier files is GSTR1. Copy along with me. Supplier files GSTR1. And recipient gets in GSTR 2B. Recipient gets in his GSTR 2B. Clear? Right. So write down the refer notes. Refer notes. Shall we proceed? Have you written refer notes in the textbook? Fine. So this is the notes. Font size visible, Ara? Now? So those who are watching the recordings, pause the video and copy this. 1 second, ma. Those who are watching the recordings, pause the video and copy this. Next, pause the video and copy this. Pause the video and copy this. Okay. See, these discussions will reduce our time for discussion in upcoming chapters. Returns chapter, when we are discussing returns chapter, again we need not discuss what is GSTR 1, 3B, 2B, all that stuff. So parallelly we had a detailed discussion of section 37, 38, 39 also. Okay, next. So shall we continue? Right, next. So clause A is done, AA is done. What is clause B? And one more thing, below that there is some rule 36 we are going through, documentary evidence, all that stuff. Sir, of course you should have a documentary evidence. Buffalo, last bench, listen here, leave about that audit and law, come to GST. So rule 36, what is rule 36? You should have some documentary evidence. Okay, next, that documentary evidence should contain certain details, we have seen that. Next, sir, here 36 sub rule 3 says, sir, any GST paid because of any demand notice received by you. Why you have received demand notice? Because you are you have committed fraud or willful misstatement or suppression of facts. Because of that demand notice came. Sir, I paid GST. No sir, so I will take ITC. You cannot do that. So rule 36 sub rule 3 clearly says you cannot take ITC of that GST paid on demand notice received because of fraud, willful misstatement or suppression of facts. Okay. Next, one more thing is what? Sir, rule sub rule 4, just now we have discussed this, sir. Check and confirm. Read this and tell me whether we have discussed this just now. No input tax credit shall be availed by registered person in respect of invoices or debit notes unless the details of such invoices or debit notes have been furnished by the supplier in his GSTR1 or his IFF, and the same thing is reflected in his GSTR2B. Am I clear? That is what so long we have discussed and written the notes. Okay, fine. So that is all about clause AA along with rule 36. Shall we continue? Now, sir, here 16 subsection 2 clause B. You should not forget the title above. You are not eligible to take ITC unless clause B says what? Unless you have received the goods or services or both. That means, sir, I have purchased the goods or services, I have invoice with me, I have paid the consideration. Still you cannot take ITC unless you have received the goods. or services. That is the reason why there can be sometimes variation in your 3B with 2B. 2B is showing the credit. Why? Because that fellow raised invoice. Imagine I have placed an order. Goods are coming from Delhi. December 31st I have placed the order, made the payment also. Invoice is also raised by him on December 31st. But the goods are coming from Delhi. So imagine the goods are reached to you like somewhere around Jan 10th. Then, sir, 2B is showing in December month 2B that amount will be shown. But when you have received the goods? In the month of Jan. So for which period you are eligible to take ITC? Jan. Are you able to understand? So practically if you speak, you should take that way. What people may do, okay, before filing GST return only we have received the goods. No, let us take ITC. Okay, so of course the spirit of the law is like still taken care of. So the point is what I am just giving you an example where you have the invoice, you have made the payment consideration, but still you cannot take ITC. Why? You have not actually received the goods or services. Am I clear? Shall we proceed? Right. Now I have a small doubt here. Sir, suppose I am manufacturing, let us assume, footwear, and I am purchasing leather. So purchasing the leather, using that in manufacturing the footwear. But I am not manufacturing it on my own. I have outsourced this to a job worker. I will supply to the job worker the leather, and I will give him the design also. He will manufacture the shoes, send it back to me. I will just put my logos and dispatch it to the market. Okay. So now the point is, sir, I am procuring leather, let us say, imagine from Mumbai. To the Mumbai port, we have imported the leather. That fellow who is like selling leather to us, that fellow is importing the leather. So he is buying it, and he is from Mumbai. From him I am buying. My job worker is in Hyderabad. I am in Chennai. You tell me, from Mumbai bringing leather to Chennai and again me sending that to Hyderabad, does it make sense? No. Why? Because instead of that, Mumbai to Hyderabad is the distance is near. Instead of bringing from Mumbai to Chennai and Chennai to again Hyderabad, you can directly send that from Mumbai to Hyderabad easy. So what I am asking to my supplier, Ayya, you don't send leather to me to Chennai. My job worker is there in Hyderabad. You directly send the goods to him. You tell me, who is the recipient here? I am the recipient. I am in Chennai. I should have actually received the goods or services. But am I receiving? No. Some other fellow is receiving. Can I take ITC? Can I take ITC? Because goods are not actually received by me. So the law says, you need not actually receive the goods. If you are receiving them actually, no problem. But if anybody else is receiving the goods or services on the directions given by you, then still you can take ITC. Okay. So write down here, anywhere, wherever the space is permitting you. Recipient has directed the supplier to deliver the goods or provide the services to any other person. Still recipient can avail ITC. Can I call this as bill to ship to model, ma? Have you heard about bill to ship to model? What do you mean by that? Billing done to one address, shipping done to, whenever you are making the purchases in Amazon, etc., it will ask billing address, it will ask shipping address. Majority cases it will be same, except in the month of February. Remaining cases, billing address and shipping address will be the same thing. Okay, fine. So we can say this bill to ship to model. Okay. Copy this. Make it fast. There is an example also below. Please go with the example after copying this. Just read clause B once. But those who have already like seeing GST in their office, filing the returns, sometimes you may feel like why this fellow is explaining so much. Okay, so I am just keeping in mind nobody in the class knows GST. That way I am feeling and teaching you. Why? Because some students may be purely into stat audit or internal audit or purely into income tax, would have never seen GST at all. So keeping in mind everybody, so I am just teaching you like you don't know anything in GST and you forgot everything of your CA intermediate. Shall we proceed? Then copy that, go with the example, finish the example, finish the example. Shall we continue? Yes, listen. Suddenly I felt like why in this example there is a girl name called Manu. Uh, Manu means normally a female name, correct? Maybe for boys Manoj, etc., etc. No, suddenly I'm just telling you my thought process. Why I have used the name Manu here like that? Then only I realized it is manufacturer short form. I forgot that here see trader, manufacturer, retailer. I suddenly thought why there is a character name called Manu in between like that. I was wondering. Okay, even in our list of X also there is no such name. No, like that I was thinking. Fine. Okay. So coming back to the point, examples clear. Shall we proceed now? See class BA. Class BA says you can take ITC. It should reflect in 2B. That is what said in class AA. But in 2B also, whatever is reflected should not be restricted by section 38. Section 38 says you can take ITC if it is there in 2B, and also section 38 is giving power to the government to restrict that ITC. Government can restrict that ITC. So you cannot take ITC if certain things happen. Sir, what are those things? I will discuss in returns chapter. Now this is too much overdose of like we are deviating from ITC chapter. So there we will discuss. As of now, just ignore it. Am I clear? Same thing again, section 38, the same points we will see in returns chapter also. Shall I continue? What is the simple thing we have to understand here? Clause BA is saying whatever ITC you want to take, in 2B it is reflected, but that should not be restricted by the government. Government got the power to restrict it. Okay, you should not question the government because law is giving the power. Earlier this power was not there. Now they have got this through amendment. Why? Because without this power they have already restricted through various rules, notification, all that stuff. So just to get the backing for those rules and notifications, they made amendment in the law. Why? Because people started challenging those rules and notifications. So just to be safe, they made these amendments that we will see there. Shall we proceed, ma? Am I clear? Fine. Next, what is clause C, Ra? What is clause C? Ma, you are getting late for your office, Ra? You can leave. You are getting late for your office, Ra? Then, what is clause C? What is clause C? I have given section 41 below for your information. In the next page, and you should read that along with rule 37A. So clause C will take you to section 41 and section 41 will take you to rule 37A. That is a combined provision. You read and tell me what is your understanding. Make it fast, please. Mark it important. Everybody, those who are watching the recordings, please pause the video, read clause C and read section 41 along with rule 37A. What is clause C saying? Sir, subject to the provisions of section 41, tax charged in respect of such supply has been actually paid to government, either in cash or through utilization of ITC, admissible in respect of such supply. In simple words, what clause C is saying? What clause C is saying? By whom? By your supplier. That means simple, your supplier should have paid GST, then only you will get ITC. Why? Because understand, Ray, you filed your GST R1, it will come in my 2B, but you have not yet paid tax to the government. How you will pay tax to the government? Only by filing? What people were doing, they were filing their GST R1, they are not filing their 3B. So what happened? Sir, it is reflected in 2B, but what you are taking ITC from the government because it is reflected in 2B, but your supplier never paid tax to the government. Okay, so to avoid such areas, we are bringing a clarity here. Because it is reflected in your 2B, you cannot take ITC. You should also make sure your supplier has paid tax to the government. So supplier should have paid the tax. That is what the interesting thing here. You should check recipient GSTR 3B filing status. You can see the filing table, correcta frequency table in the government portal. So you go to the government portal, you enter the GST number, you can see the filing table. It will show for which month he has filed 1 and 3B, all that. If he has filed 3B, sufficient. Okay, if he has filed 3B, it is sufficient. Why? Because 1 he has already filed. It is reflected in 3B, he cannot reduce the liability and pay. Mine 1, he has shown 10 lakhs liability. 3B, he has paid only 7 lakhs. There is a difference. Department will give notice and start recovery, that they will be taken care of. But that fellow should have filed 3B. Okay. So your responsibility will end to check whether he has filed 3B or not. You cannot go to his 3B and see whether my GST amount is paid or not. 10 customers are there, 10 lakhs, imagine liability. That fellow paid only 7 lakhs. Whose liability he paid? How we will identify? Now our response, that is why section 41 rule 37A, what it says, that is what important. I am just giving you the background for class section 41 and 37A. What is the background here? The law says supplier has to pay GST to government for recipient to avail for recipient to avail ITC. Okay. Sir, that means whatever is there in 2B, that is what? Your provisional credit. That is not final. Department, whenever they want to just call off that credit, reverse that, they can do that. Okay. So now this is based on section 41. They said no, subject to provisions of 41. Then what is 41 saying? 41 is saying if your supplier has not paid, what is your duty? So read section 41 along with 37A. I'll give the notes and just close it off. Okay, you read and tell me what is your understanding. Section 41 and 37A, and mark it important. Please mark them important. Those who are watching the recordings, please pause the video and copy. Sorry, read. So section 41, simply what it says, same story. You take ITC if your supplier has paid GSTR1, but it is provisional. You have to reverse the ITC as may be prescribed if he is not following the conditions, if he has not paid the GST. Sir, for that they have prescribed rule 37A. What is that they are telling in rule 37A? Have you gone through rule 37A? Now imagine, for this I have just given an example. Example number? Example number? Okay. Ashik is celebrating this example, I guess. Okay. You have the space in the next page to copy that example. You can write there itself. Now look at this. See, there is a supplier making a supply of goods to recipient. Value is 10,000, GST is 1,200, and you know the supply is made on the auspicious day 2nd June. Okay. Now this is happening in which month? June month. June 2023. What is supplier duty here? Supplier will file his GSTR1 for June 2023. Immediately what will happen? That will come in recipient 2B. So recipient also will avail ITC for June 2023. But this supplier has not filed 3B. Imagine month itself he stopped doing business. He is like running out of funds, no working capital, nothing. So he is completely now bankrupt almost. Imagine he has not filed 3B, because to file 3B he needs money. He doesn't have money. So he stopped filing all the returns that day. Only June month GSTR1 is the last return. After that he didn't file anything. But you have taken ITC because of it is reflected in 2B. Now what section 41 read along with rule 37A says? Ray, because recipient you have taken ITC of that, you see whether your supplier has filed GSTR 3B of June month, June 2023, at least before the succeeding financial year 30th September. Succeeding financial year 30th September. Before that, at least that fellow has filed his GSTR 3B or not, you check. That means understand, for every supplier from whom you are taking ITC, you should check his filing table frequency. This will be another one more audit process for you while closing the books. Okay. You are saying it is difficult. That is why article students are there. Okay. No, there is no other option. Simple, for every damn supplier from whom you are receiving the goods or services, you should check his frequency of the filing frequency through the government portal. And if he has not filed his June month GSTR 3B, on which you have taken ITC before 30th September, you have to reverse the ITC taken by you. But I am not going to harass you here. You have taken ITC because it is reflected in 2B. I am giving you 2 months time. Without interest you pay that. How much ITC you took here? 1200, 1200. Pay back that 1200 without any interest before 30th November. You should see whether that fellow has filed it or not before 30th September. If he has not filed, you pay that back before 30th November. Before 30th November. Okay. But you are also neglecting. Within 30th November you have not paid. Now I will start charging interest from you. Okay. So after the expiry of 30th November, till the date of payment by you, you are reversing the ITC actually. That means you are paying back the 1200. Till the date of payment, you are supposed to pay interest. Okay. So interest as per section 50. We will see section 50 in different chapter, how the interest calculation is to be done. Just remember here, you should also pay interest. From which date? 1st December to date of payment of tax actually. Sir, by any chance, imagine, I did that, sir, reversal, everything I did. But my supplier, from whom I purchased that fellow, like by chance, Feb 2025, 2024 only we reversed everything. 2025 for February month, his girlfriend gave him a gift of cash 1 crore rupees. Review your business like that. Okay. Now first thing what he will do, he will first revive his GST number. It would have been already suspended or cancelled, whatever it is. So he will apply for revocation of cancellation. Okay. So all that stuff. So now for that first he should pay GST pending liabilities. He paid all those stuff. He filed his June month GST or 3B. Paid the liabilities, all that. When Feb 2025, can we re-avail ITC? Because you asked me to reverse, no sir. Now, that fellow has filed his June 3B. Can I re-avail ITC? Yes, you can re-avail ITC. But for this re-availment of ITC, is there any time limit applicable? Section 16 subsection 4 talks about time limit for availing ITC. Section 16 subsection 4 we will discuss in some time. Any invoice or debit note belonging to a financial year, you can avail ITC, correct? But what is the deadline? That we will see in section 16 subsection 4. What is the deadline? Any idea, ma? 30th November or actual date of filing? Annual return, whichever is earlier. We will discuss that in some time, don't worry. That means just understand, you purchase something, you have to take ITC. Imagine you forgot to take ITC. Now you will get a doubt. Sir, it is reflecting in 2B, no sir, why will I forget, sir? 3B also I filed, but I forgot to take ITC. Imagine you can take ITC only if you actually receive the goods or services. So, December 31st you ordered, goods came at the end of Jan. You reversed that ITC while filing December month. You reversed that proportionate ITC because you have not actually received the goods. You should take the ITC next month. Next month, due to some tension, you forgot. Correct? Last month you have reversed it. Why? Because next month only I will receive the goods, I will take ITC that time, like that you reversed it. So next month you received the goods. You should take ITC or not? Yes. Imagine you forgot. Can I take in the next month? That next month also you forgot. Can you take that next month? That next month also you forgot. Can you take that in that next month, ma Pravina? So that means, sir, what is the deadline? The deadline is, Ray, if you have forgot anyway, at least while audit you will identify that. During the audit of books of accounts, reconciliation, year end over. So when you are reconciling the books, all that stuff, at least that time you can identify that, correct? So they are giving you a deadline. Ray, any financial year ITC, if you have not taken, don't worry, Ra. Next financial year till 30th November I will give you the time. Okay, 30th November of the succeeding financial year or actual date of filing annual return of the relevant financial year. ITC belonging to 23-24. 23-24 return when you are filing annual return. That date or succeeding financial year 24-25 in that 30th November. That means 30th November 2024 or actual date of filing annual return of 23-24, whichever is earlier. That means I just show you one example also. I just want to tell you, sir, ITC of one financial year of any month I forgot to take. Can I take it in the next month? Yes. That month also I forgot. Next month? Yes. That month also I forgot. Next month? Yes. Is there any deadline for this? Yes. ITC is just like your relationship. Comes with an expiry date. Okay. So, just a quotation I read and sharing with you. It is not like every relationship will come with expiry date. So now the point is, sir, ITC will come with an expiry date. What is the expiry date? 16 subsection 4 says that expiry date is not applicable to this. You can re-apply ITC. Sir, that fellow filed GSTR 3B of June 2023. When? Feb 2025. After 16 subsection 4 time limit only. Can I re-avail that ITC, sir? You can happily re-avail the ITC, Ra. 16 subsection 4 time limit is not applicable. Why? 16 subsection 4 time limit is applicable only for availing. Here you are re-availing. That means it is like when you are getting married for the first time only, they will see age, horoscope, caste, community, all that stuff. For second marriage, nothing. If they give the girl only sufficient, sir, like that they will feel. So, whenever you see re-availing ITC, not only here, we will see in next another subsequent concept also. Re-availing ITC, they would have given a point. section 16 subsection 4 time limit is not applicable. Simple. Am I clear? Shall we proceed? Right. So that is what the concept. So please copy this. Reverse the ITC by 30th November. That is practical thing. You take a call. Then you should understand what is the spirit of the law. Okay, I should reverse. That is what? 30th September is the deadline. By any chance, if that fellow has, I am sincere fellow, 30th September I have checked. Immediately October 10th I am reversing. That fellow goes and pay on October 15th. He filing in October 15th GSTR 3B. One day before only I paid. Next month I will reavail, or I will wait till 30th November. Okay, so that depends upon the case to case. Am I clear? So there you can take a call. So you can take a loophole there. 2 months you can wait and see whether that fellow will make the filing or not, all that stuff. Shall we proceed? Yes, copy this, copy this. Font size visible, Amma? Last bench? Visible, font? Okay, those who are watching the recordings, please pause the video and copy this. Example 80. This is a comprehensive example for section 41 plus rule 37A. So pause the video and copy this. Pause the video and copy this. Make sure you are fitting that in the page, in that box only. And next, pause the video and copy this. Pause the video and copy this. Clause, we are done with clause C. So what is this all about, sir? Clause C says, sir, you can avail ITC which is reflected in your 2B, but that is subject to provisions of section 41. What is section 41 is saying? Section 41 is saying only if your supplier has actually paid the GST to the government, then only you could have, whatever the ITC you have availed, that will be final. Okay, but suppose if he has not paid it, you should reverse it as may be prescribed according to the prescribed manner. The manner is prescribed in rule 37A. Rule 37A says that, sir, if your supplier has not filed his GSTR 3B by the succeeding financial year 30th September, you should reverse the ITC taken by you before 30th November of the succeeding financial year without any interest. If you are reversing it later on, you should pay interest from the first day after 30th November till the date of payment as per section 50 that we will see. Now, sir, if at all he has filed his GSTR 3B at later on point of time, can I reavail the ITC? Yes, you can reavail the ITC without any time limit. So section 16 subsection 4 time limit is not applicable here. So that is what all about that. So now we are done with an example regarding that. Now, so there is one last clause here, clause D. There are provisos that I will take tomorrow. We need some good time to discuss. Clause D simple, as I already told you, it is reflected in your 2B. You keep watching that. Can you take ITC? You should file your 3B, right? So recipient has filed his, he has furnished, unless he has furnished the return under section 39. So there is GSTR 3B. So only if you have filed your GSTR 3B, you can take ITC. That is what section 16 subsection 1, 2 for you. There are provisos below section 16 subsection 2. That provisos will take up in the next lecture. Am I clear? Shall we proceed? Shall we wind up the session? Thought like too much of explanation regarding returns, sir? Have you felt like it is too much, the explanation? Okay, right, fine. So see you all in the next lecture. Please finish question bank of exemptions and revise ITC. Okay, so we'll take up the exam, input tax credit in the next lecture, the balance one. Hopefully this week we'll finish input tax credit by next Friday or Saturday, I think, or maybe Sunday also we may discuss that. Sunday you will not have holiday. Sunday is bogey, I know that. You know that, huh? Life only becoming bogey, sir. What is so Sunday, even though it is bogey, we'll have the lecture, huh? 1 second, ma. Okay guys, see you on in tomorrow's lecture. Please don't waste your time, read other subjects, effectively utilize your balance time. So see you all in the next lecture. Thank you and Jai Hind.